Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risks. Today I'm covering Deckers Outdoor, the maker of Uggs and Hoka. And I'm going to look at whether tariffs are going to be a huge threat to the company's business. Is this a worry for investors? Let's start with the company's business strategy. Deckers is a brand acquirer and builder. The company's success really started when it acquired the Uggs brand in 1995. That is a steady growth brand for the company. Hoka is the brand company acquired in 2012 for about $1.1 million. That has been a phenomenal investment. And those two brands together, along with smaller contribution from Teva, drive the company's business. The other thing we can't overlook is that Deckers Outdoor has a phenomenal balance sheet, $2.2 billion worth of cash on the balance sheet, and doesn't have any debt. But what are the growth opportunities? Even in a tariff environment, Hoka is really the company's growth opportunity. This is a global brand. So yes, the US is going to impact the company's operations, but Hoka is a brand that's growing worldwide. It has a great niche in the running business and has a ton of growth runway to catch up to leaders in the industry like Nike. So some of the growth could be impacted by tariffs in the US, but that's not going to destroy the business internationally. But of course, with any fashion brand like this, there are risks. Fashion is inherently risky. Uggs grew a ton during the 2000s and 2010s. That could reverse if their products go out of style. The same can be said for Hoka. We also have the tariff risk. You can see from this graphic that the company put out, Hoka produces its products in China, Vietnam, the Philippines, Malaysia, Cambodia, Indonesia, and then a small amount of product in the Dominican Republic and Thailand. What you don't see is any production within the United States. So almost all of that production, as we know it today, is going to be impacted by tariffs. At the very least, a 10% tariff coming into the US and potentially higher than that, depending on which country that production is coming from. Now, Deckers Outdoor does have a couple of advantages. They have solid margins that they can fall back on. I think they have more pricing power than a lot of their more commodity competitors. And the reality of the shoe and the fashion business is that this is almost all produced in Southeast Asia. Deckers Outdoor is not going to be the only company impacted. And I think they're actually in a slightly better position because of their branding than a lot of their competitors. They also have agency here. They can move their production to other countries that maybe don't have the same tariff impacts, or where that tariff impact is going to be minimized. So what's my prediction? I think Deckers Outdoor is a phenomenal brand. They have shown the ability to adapt through challenging times like the great financial crisis, and they're better positioned than a lot of their competitors. Yes, tariffs are probably going to be a headwind, but the great thing for investors is that a lot of that is already priced in. The company's enterprise value to sales is under 3 right now. Price to earnings multiple is 17. While there's risk to the bottom line from tariffs, I think that's already priced in, and you get a great growth company with the potential upside of multiple expansion if tariffs don't have a big impact on the business. So what's the recap? Deckers Outdoor has phenomenal brands in UGG, Hoka, and then also don't forget the Teva brand that drives the company's long-term growth. They are going to be impacted by tariffs in the US, but this is a global business, and they can likely adapt their supply chain much more quickly than some of their larger rivals. So while tariffs are going to be a headwind for Deckers Outdoor, I don't think it's going to debilitate the business. A lot of those headwinds are already priced into the stock, giving us upside when there is more certainty in the market. Now, at the Motley Fool, your comments make us smarter, so please comment below with your own research and insight about Deckers Outdoor, and tell us what stock you want to see on Crunch Time next. Of course, check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. See you here next time.